Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Wednesday, February 15th. Well, when I joined you about 1 month ago, right here on Your Daily Five, this was the video. This sentiment indicator screams go long now. January 6th, 2023. I want to show you the chart on the S&P 500. There was your January 6th. That was the call. Look at what the stock market has done since. You got to follow those sentiment indicators. The VIX was screaming at us to be long to start the year. And I'll tell you what, almost all the sentiment indicators right now are lining up perfectly for this market to keep going higher. So with that, I'm going to give you my daily five for today. Before I get into that, though, I do want to just make sure everyone is aware. Go over to earningsbeats.com. That's earningsbeats.com, both plural, and find out a little bit more about us at Earnings Beats. If you scroll down, you'll see an area where you can sign up for our free Earnings Beats Digest newsletter. We'd love to have you. 3 times a week newsletter, Monday, Wednesday, Friday. Very simple, 2-paragraph, 1 chart kind of a newsletter that you'll get 3 times a week. All you need to do is put in your name, email address, hit that subscribe button. No credit card required, and you can unsubscribe at any time. If you'd like to be a paying member at Earnings Beats, if you click right here, you'll get a 30-day no-cost trial. 30 days, no cost. We do need credit card for that, but we will remind you before your 30 days is up that you're going to get hit on your credit card. So we will let you know. If you scroll down here, I want you to check out something because we've got a big event tomorrow night for our members. This is the history of our model portfolio. Since we started it in 2018, we have moved, the portfolio itself has gained 138%, which has been more than 2.5 times the S&P 500. This is guiding through the trade war of 2018, the pandemic of 2020, the cyclical bear market in 2022, and through it all, we're up 138%, which is way above the S&P 500. Tomorrow night, we will be unveiling the stocks that are going into our portfolios. So if you want to know what those stocks are for the next 3 months, for the next 90 days, you need to be at the event tomorrow. So what I want to do today on the show is I want to focus on some stocks, some of the things I look for when we're putting together these portfolios. And what I want to focus on today are stocks that are performing well, even in this environment. These are stocks that are continuing to perform well, maybe breaking out of some recent weakness. And I'm going to start it off right here with Airbnb. ABNB just reported earnings last night after the close. Stock gapped up. It was a very nice report. Got a big gap up, cleared overhead resistance. If you look back all the way since May of 2022, you can see these tops all coming in at about 126, 127, could not get through. Went back down to one final low at the end of December. And ever since that, pretty much that January 6th day, you can see this stock has been moving higher. Volume trends have been picking up, and now we're getting the breakout. Look at the AD line, accumulation distribution, breaking to a new high, price action breaking to a new recent high, at least going back about 10 months. And then look down here, travel and tourism just breaking out to its highest level, the entire index breaking out to its highest level in 10 months. Airbnb relative to the travel and tourism group, moving to about a 3-month high, starting to trend higher. And if you come down here to the bottom, you can see travel and tourism relative to the S&P 500 breaking out to its highest level since back in May as well. So what I look for when I'm putting together a portfolio, I want to see stocks that are outperforming their peers, showing leadership, stocks that are within a group that is outperforming the S&P 500. So you're getting leading stocks in leading industry groups, and then a nice dose of accumulation never hurts. Throw in that price breakout, and we have one stock that we will certainly be considering for our portfolios. Next stock, this is Atkore International Group. This is in the electrical components area. First of all, AD line, look at it. Once again, been trending higher. Even when we were going lower in price, there was accumulation taking place And that was one of the things I pointed out throughout 2022 to our members. Wall Street was accumulating. It was a cyclical bear market because I could see the signals Wall Street was accumulating. So we're getting all this bad headline news, all the media outlets screaming the prices are going to go lower, everybody getting more and more bearish. Sentiment really reset during 2022. Now almost everybody is bearish, thinks the market has no chance of going higher, and that's why we're going to go higher. But anyway, ATKR, Atkore International, look at the AD line continuing to strengthen. There was your earnings report. There was your gap up. I think this 140 down to maybe the 20-day moving average at 137 provides really good short-term support here. If we go down a little bit lower, you'll see again volume trends turning up. Look at the group breaking out to new highs. If you go down, scroll down a little bit further here, you can see ATKR relative to its peers has been trending up for about 4 or 5 months now. And the entire group has been trending up relative to the S&P 500 since April of last year. Money is rotating into the group, and ATKR is a leader in the group. Again, lethal combination in a good way. CRUS, this is Cirrus Logic. So Cirrus, again, a huge move in the last 6 weeks in the AD line. Look at all these hollow candles. When you're closing at or near your highs of the day, you're going to get a lot of these hollow candles, and this stock just continues to push higher and higher. Now, it is overbought. I would suspect we're probably at some point going to get a 5, 6, 7% pullback, and I think that would be a great opportunity to pick the stock up. But here, Cirrus, you can see the volume increasing on the breakout. Lots of hollow candles sending that AD line higher. And then let's go down here. Semiconductors have been very strong since their October low, moving up. They are on the verge of about a 10, 11-month breakout to a new high. So those who are calling for recession, thinking a lot of these aggressive groups are going to roll back over, that has not been the case. And if semiconductors make this breakout, if you see the Dow Jones U.S. Semiconductor Index trading over 7,400, that is going to be an excellent sign going forward for many stocks, but especially the leaders in the space. Check out Cirrus relative to the semiconductor group. It has been trending higher. Not only that, it went back and took out its September relative high. I think the stock looks really good right here. And here's your semiconductors relative to the S&P 500. We actually, just a couple of days ago, had a breakout to the highest relative level that we had seen since all the way back at the beginning of April of 2022. This is nearly a year ago. Semiconductors are strengthening, and Cirrus is one of your leaders. Next up, MSCI. We're going to move over to the Specialty Finance Group. MSCI, excuse me. You can see again, AD line, very strong, showing a lot of strength, a lot of building momentum, and a lot of accumulation by Wall Street. Beautiful move up. Got a little bit of a flag here going, but look at all of the the absolute price highs that took place at about 525 or so. April couldn't get through. November couldn't get through. Twice in December couldn't get through. January couldn't get through. Then look at the volume pickup as we finally make that breakout. I think the breakout of this period of consolidation is just beginning here for MSCI. Volume trends confirm it. If we look at the Specialty Finance Group, watch the 520 level. That is where we have had some overhead resistance. I believe a breakout confirms this group. MSCI has been a relative leader in the Specialty Finance Group now for about 10 months. And if you look down here at the bottom, Specialty Finance relative to the S&P, beginning of February, actually moved to the highest level since back in March of last year. Clearly an uptrend, relative uptrend in play. So again, for the fourth time, you have a leading stock in a leading industry group. I'm going to wrap up with this one. Peleton. Peleton, there weren't too many stocks that got hit harder than Peleton during the whole pandemic. Remember, it took off the beginning of the pandemic, but then it ran into problem after problem after problem. Once we got into a reopening economy, Peleton really took a big hit. Check this out right here, though, on a price basis. Could not get through about 13.5, 14. Same goes here again, August, twice really. And then early December, came back up, got to about 13 and a quarter, 13 and a half, could not get through. Well, with their latest earnings report, they raised guidance. The stock made this big breakout here. Look at the volume, 80 million shares changing hands. You can look back, and outside of this, and this was actually a solid accumulation day right there as well. But these were the two highest volume days of the year. This one was not, we didn't have the breakout. This one we did. We have pulled back, printed a nice little hammer there off gap support in the 20-day moving average. I think Peleton is poised to go higher here. That AD line has been strengthening. Wall Street, you might be hearing bad things in the news or having heard bad things in the news for the last year, but secretly, Wall Street's been accumulating this stock. Now we're getting the breakout, and I think the stock's going to go higher down the road. They did raise guidance with their earnings. I think that sets the stock up for higher prices. Recreational products right here breaking above the August high. So we got a group that's strengthening. And when you look at Peleton relative to the group, it is starting to turn higher. And at the beginning of February, it hit its highest level since back in May of 2022. Last point, recreational products relative to the S&P. Look at the movement, the rotation that has been coming into the recreational products group over the last month and a half. So you got a stock that's breaking out, reported great numbers, raised guidance, and is showing leadership within a group that has broken out on a relative basis as well. So again, that's what we focus on at Earnings Beats. We want strength. We want leadership in leading industry groups, leading stocks, leading industry groups. I think those are 5 excellent candidates. Whether or not they make our final cut, well, you have to join us tomorrow night to find out. But again, if you go over to Earnings Beats and just click on that no-cost trial, you can join us for our session tomorrow night. I would absolutely love to have you. It was a pleasure joining you today on your Daily 5. Please remember, go to earningsbeats.com, sign up for a 30-day free trial, nothing to lose. And join me tomorrow evening as I unveil those 10 equal-weighted stocks that we will be included in our 3 portfolios for the next 3 months. I hope to see you there. Happy trading, everybody.